So on episode one, we're going to start off with the basics. So what are stocks? This is on investor.gov. So this is for the United States Securities and Exchange Commission. This is for the U.S. So if you're an international viewer, it may be a different website for you, but the gist is basically the same. Um, Stocks are type of securities that give stockholders a share of ownership in a company. Stocks are also called equities. So if you look at a channel like CNBC, they may call it equities, just their terminology, the way they use it, but essentially it's stocks. So going into a question that they have on here, why people sell stocks. People sell stocks for capital appreciation, which occurs when a stock rises in price. Dividend payments, which is what this whole series is about, which come through the company distributes some of its earnings to shareholders, and the ability to vote shares and influence the company. So not many people that I know buy stocks just to have that vote, but people do buy for capital appreciation as well as those dividend payments. So dividend payments is a big reason, you know, why people or how people grow accounts. Capital appreciation is another way people do it as well, whether that's capital appreciation through buying penny stocks, which, made famous for, the Wolf of Wall Street movie that came out, a little whiles back. And then also, people buying penny stocks and flipping those. And then also, getting stocks that are uh, large cap stocks and flipping those once they go up. Um, then it says, why do companies issue stocks? So some of the reasons why they issue stocks, according to the website on here, it says paying off debt, launching new products, expanding into new markets or regions, enlarging facilities or buildings, or building new ones. So basically, when a company issues stock, it's so that they can get money. They're basically raising capital so they can do things within the company, paying people, payroll, like it said, enlarging facilities and things of that nature. But basically, it's a capital grab for the company, for them to increase their capital for different activities that they have going on. It says what kind of stocks are there? So there's common stock and preferred stock, which are the two main. Common stock entitles owners to vote uh, at shareholder meetings and receive dividends. Preferred stockholders usually don't have voting rights, but they receive dividend payments before common stockholders do and have proprietary have priority over common shareholders if the company goes bankrupt and its assets are liquidated. So basically preferred is over common, but most common is called common. So also companies offer these are different type of stocks that are common and preferred. You have growth stocks, income stocks, value stocks, and blue chip stocks. So growth stocks have earnings grow faster, growing at a faster rate than the market average. They rarely pay dividends, and investors buy them in hopes of capital appreciation. So, one stock that I definitely have to say falls directly into this category is Tesla, ticker sign TSLA. So, Tesla basically is a long term, people will say it's a long term hold, which means they're going to hold it for a long term. It doesn't give dividends, but people are holding it in hopes that it'll continue to grow and that they'll be able to cash it out for cheaper than they bought it. Income stocks pay dividends consistently. Investors buy them to generate income, which is what this whole video series is about. So I'll elaborate more on that. Value stocks have low price to earnings ratio or PE ratio. I'll explain that later on as well, meaning that they are cheaper to buy than stocks that have higher PE. Value stocks may be growth or income stocks, and their low PE ratio may reflect the fact that they have fallen out of favor with investors for some reason. Blue chip stocks are shares in large, well known companies with solid history of growth. They generally pay dividends. So, Apple, I would consider a blue chip stock. Microsoft, definitely consider a blue chip stock. They both pay dividends, and they are very well known and very large companies. So those are example of some of those. Um, what is the benefits and risk of stocks? I really don't have to read this, but I can explain it to you. Basically, the benefits of buying stocks is if you get dividends, um, you know, Dividends can help grow your account, but if you're buying for capital gains or capital appreciation, basically you have the risk of losing money. So if you buy a stock and it goes down, then you have the risk of losing money on that stock. So always do your due diligence. Make sure you're researching the stock, get as much information as possible before make that informed decision. Um, and just watch videos, read books. There are tons of material out there that can help you when making an informed decision about trying to go and buy stocks. And nobody's forcing you to buy it, so you don't have to buy the stock. You can just go and just wait, and just write it down on a piece of paper and see what happens. If it goes up or goes down, you put no money in, or you can do paper trading. So paper trading is basically setting up an account. Um, I know Webull does it, where you can actually go and trade stocks, real stocks, but they give you like fake money. That's what's called paper trading, and then learn how to trade stocks. So that's always very helpful. It helps you trade stocks, and you don't really lose any of your actual money itself. So that's always a good way to learn how to trade, is doing paper trading. Um, Webull has it. I don't think Robinhood has it, and M1 Finance doesn't have it as well. So if you want to join any one of those brokerages, I have a link down below where you can sign up and get free stocks. So that'll always help. Scrolling down here, we have how to buy and sell stocks. So you have stock plans, you have dividend reinvestment plans, stock funds, discount or full service brokerages, and stock funds. So direct stock plans basically is like an M1, a Robinhood, or a Webull, where you just sign up for the app. You get the free stocks for signing up, and then you can begin trading. It's commission free, so you're not charged for trading. I know TD Ameritrade, I think has free trading as well. It's one that a lot of people like to use as well. Dividend reinvestment plans is basically where they reinvest your dividends for you. I think M1 Finance has that. If you get dividends coming in more than $10 or above, I think it automatically reinvests for you. Um, and then discount or full service broker. It's basically where you go to someone and then you pay them to invest for you because they have the experience and knowledge to do so. Um, you do have to pay commissions on that because they have their certification. They are CPA. I am not a certified CPA. So, if you want to contact a CPA and get more financial information, make sure you contact one that is licensed. This is all just for educational purposes, point you in the right direction to help you begin getting passive income. So understanding fees. So a lot of brokerages charge fees. So just bear that in mind when you go to one. Ask them what the fees are. They legally have to tell you the fees, so they can't just start investing and you not know what you're being charged. Going to a brokerage like Robinhood, or going to um, M1 Finance or Webull, you don't have fees, so you don't have to worry about that. Um, Going into dividends. So this is Investopedia. Basically explains what dividends are. If you're not familiar with dividends, I've been throwing that term around, so now I'll finally explain it. A dividend is a distribution of some of the company's earnings to a class of its shareholders as determined by the company's board of directors. Dividends are payments made by publicly listed companies as a reward to investors for putting their money into the venture. Announcements of dividends, payouts, and generally accompanied by a proportional increase or decrease in the company's stock price. So basically, the company issues dividends and you get paid just to own the stock. So it's a pretty fantastic plan, and you can see how your account can grow. And I'll explain that more in another video on how you can grow your account with dividends. But I hope this video helped you with just introduction on what dividends are and what stocks are. And tune into the next episode where I go and dive more in depth into explaining how dividends can grow your account and why dividends are so powerful for compound interest. All right, thanks for watching, and make sure to hit the subscribe button down below. Like, comment, and share. I'll see you guys next time. Peace.